to my channel. I'm Doris. I'm here to show you about the market updates today. Today, Nasdaq and the S&P are set for first quarter gains. U.S. stocks continue to rise at noon on Friday. Today is the last trading day of the first quarter. The Nasdaq and the S&P 500 will record gains in the first quarter. The U.S. Personal Consumption Expenditures Index (PCE) fell short of market expectations in February, perhaps suggesting that the Federal Reserve has begun to make progress in combating high inflation. Friday is the last trading day of the first quarter. In the first quarter, the market paid close attention to the Fed's interest rate path. Since mid-March, the collapse of Silicon Valley Bank has caused a panic in the financial market. As of Thursday's close in the first quarter, the S&P 500 and the Nasdaq rose by 5.5% and 14.8% respectively, while the Dow fell slightly. In March, the S&P and the Nasdaq rose 2% and 4.9% respectively, while Dow rose 0.6%. But during this period, the U.S. stock market was by no means smooth sailing. In the early March, two U.S. regional banks collapsed one after another. Credit Suisse was forced to be bought by UBS. Deposits of many small financial institutions fled, putting pressure on U.S. stocks. It wasn't until the late March that the U.S. federal government backed depositors' deposits at SVB and Signature banks and created special lending facilities for other banks that helped contain the crisis. Primary credit totaled $88.2 billion, while banks received $64.4 billion through the Fed's new Bank Term Funding Program, according to data released by U.S. Central Bank on Thursday, covering the period March 2020, 22nd and 29th. The total was $152.6 billion, down slightly from $164 billion in the previous week. The data suggests that the banking crisis is stabilizing as the month draws to a close. In March, technology stocks became beneficiaries of sector rotation. Quincy Crosby, chief global strategist at LPL Financial, said the recent rebound in U.S. stocks helps confirm markets' view that the problems that have led to a crisis of confidence in the market are likely to be well contained. She believes the semiconductor sector have regarded as an important indicator of global growth, and the sector has performed strongly recently. In terms of economic data on Friday, the Fed's most important inflation indicator, the core PCE price index in the U.S. in February increased by 0.3% month-to-month, with an estimated 0.4% and the previous value of 0.6%. The core PCE price index in United States in February increased by 4.6% year-on-year, expected to be 4.7%, and the previous value was 4.7%. The U.S. PCE price index in February rose by 5% year-on-year, 5.1% expected, and 5.4% previously. The PCE price index rose 0.3% month-on-month in February, 0.3% expected, and 0.6% previously. The U.S. PCE price index for February was lower than market expectations, which may indicate that the Federal Reserve is beginning to make more progress in fighting high inflation. Analysts pointed out that the annual rate of core PCE price index in the U.S. also recorded a good performance in February, but whether the Fed can insist on raising interest rates again is far from certain. But we all know, the Fed's goal is always to bring inflation back to the 2% target, but without causing a serious economic reaction. Although today's PCE data made some people in the market think that the Fed may stop raising interest rates, if inflation remains high, it is expected that the Fed will have to continue raising interest rates, even at the risk of causing an economic recession. In fact, the vast majority of economists believe a recession is imminent. On Thursday, several Fed officials expressed the need to tighten monetary policy further, despite the failure of 3 U.S. banking firms this month. Some Fed officials have pointed out to banking problems as a possible blow to the economy, while recent data, including a rise in jobless claims last week, has also supported the hopes that central banks is nearing an end to its interest rate hikes aimed at cooling demand. Individual stocks. Virgin Orbit plummeted. The company announced that it will lay off 90% of its workforce and cease operations for the foreseeable future, after failing to secure necessary financing needs. Groupon, an e-commerce marketplace service provider, announced management changes, with the board member Dusan Kitzbühel taking over as interim CEO, effective immediately. Zico will succeed Kedar Keshpande as CEO, and director will act as an advisor for 60 days to assist the transition. Netflix said on Thursday that the company is restructuring its film division, reducing annual film production and centralizing decision-making. The studio will combine divisions that make small and medium-sized films, a move that will result in a small number of layoffs and the departure of 2 senior executives. The Federal Reserve and the U.S. Treasury fined Wells Fargo $97.8 million for allowing a foreign bank to conduct prohibited transactions on the bank's platform, in violation of U.S. sanctions. BlackBerry announced that its fourth quarter revenue fell short of expectations. Electric vehicle maker Nikola announced an additional $100 million in stock offering. Morgan Stanley lowered the target price of BioNTech to $150. Rumble fourth quarter revenue was better than expected. Manchester United's fourth quarter loss per share was higher than expected. Mobile game company Scott's fourth quarter revenue and profit fell short of expectations. Paraday Future announced the start of production of FF91. In other markets, the European STOXX 600 Banks Index closed down 0.38% on Friday to 1,459.2 points. It has risen by about 5.13% this week. In March, it fell about 13.39%. It fell 132.57 points on March 20th, about 3.17%. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.